Good. And what today is Thursday, February 27, 2025. Jump date for Friday 28th. All right, let's go. Well, CCL triggered obviously tonight, just kind of barely. A bit of a discretionary call, but I did take the trade. At least I bought options on it, put options after it triggered. So if you didn't take the trade, it's still on a Landry list going into tomorrow. We'll take a look at that in just 1 second. I left the entry where it was on BB just in case it tries a rally and comes right back in so we don't get triggered, hopefully, on noise alone. There it is right there. So it looks pretty good longer term, but obviously wait for an entry, especially given the nature of this market. Notice that we have quite a few shorts setting up. Here's a CCL. Trigger that came in a little bit, but you know the short side, sometimes it can be a little tricky, and seems like all shorts go against you is one adage that seems to come true quite often. Anyway, if you're looking for something else to do on the short side, this EAT looks okay. It's got quite a bit of support down here. I suppose that'd be a good problem to have, but this looks like a stock that's in a lot of trouble. And you can see there's some other shorts that are getting set up here. KGS, we were just long. Now looks like a stock that could be in the early phases of rolling over. For now, let's just sit tight and, of course, wait for an entry on the BB. Now, let's hop into the overall market and drill down. Okay, S&P 500, ugly day, down over 1.5%, down to the bottom of this range. Longer term, it's not the end of the world just to pull back to the bottom of where we were early or late last fall, early this year. But we need to pay attention to what's happening, and any additional weakness, of course, would be concerning. If we take out the bottom of the range, that would be pretty ugly. And when you're in a range like this, if you drop right below to come right back up, then the overhead supply is not as crucial because nobody has time to react. But if you stay below it for a while, it becomes more and more important. And the NASDAQ, this is one of those places where it will become important fast unless we come right back up and get above these moving averages and get above the middle of the range or so. But this is looking fairly ugly. Q's also had an ugly day. You can see they got whacked 14 points. That's nearly 3%. Both time moving averages coming together, a bit of a double top in the works. So this is looking toppy too. Like I've been saying ad nauseum, some of these areas that recently broke out past their prior peaks, such as gaming and cyber computing, have come all the way back in. Cybersecurity, I always call it cyber computing. I guess all computing is cyber. Anyway, continuing on with that theme, you can see internet could make a bow tie to the downside fairly soon. They got whacked fairly hard today. Bitcoin just kind of recently broken down, obviously, well below the moving averages. Not much of a bounce at all there today. I was just looking at cash. Gold, the commodity, pulling back. Still looks pretty good longer term. Gold stocks still look okay. Oh, by the way, before I forget, I did pull the KGC. It's just, it's back below this prior little breakout level, and then today's sell-off. So I'm going to go ahead and pass, obviously, on that one for now. Sorry about that. I forgot to mention that. Again, a lot of areas recently broke out like broker-dealer have rolled right back over. We could see lots and lots of bow ties soon. As we'd say, ad nauseum, some other areas stalled well shy of their prior highs before they begin to break down. That's software. Medical devices, one area hanging in there, but any additional weakness here, or a big down day, of course, would make that look ugly fairly fast. Rusty, forgot to talk about this guy. Yeah, look at that. Multi-month lows, bow ties have rolled back over to the downside, so that's looking pretty ugly. Like I said last night, Jets were a bow tie to the downside. They sold off fairly hard out of that today. Take a look at Mags, downtrend proper order there. Getting whacked really hard. NVIDIA is looking pretty ugly in here. As you can see, opening gap, reversal there. So that's fairly ugly. Some areas like the foods, as I've been saying quite a bit, try to bottom out, and major drugs, another one of those areas, although major drugs pull back a little today, so far it looks like they're trying to bottom out, and this could be a defensive type of play in the works, so I wouldn't get too excited about that just yet. Cloud computing, none of these areas bumped up against its old highs, and nope, rolled right over, and we're getting a bow tie to the downside there. Semiconductors, boy, this really bums me out. Absolutely imploded today. Look at that, down 6% and change, now well below this range, and now it's going to have even harder time getting through this range. Anybody who bought bottom fished in here is now double thinking or thinking twice about what they just did. I'm not laughing, it's just what it is. Social media so far just pulling back, still looks okay, but there's not a whole lot of areas that are looking fantastic at this juncture. You go back to telecom, you can see none of those areas recently broken out have now pulled back in past that breakout point. Financials actually managed in a smidge higher today. I'm not sure how they pulled that off, but well off their best levels. And again, none of these areas that's bumping up against its old highs. It's actually, at least on a relative strength basis, looking a little bit better than quite a few other areas. I think that's it for tonight. Obviously, a little ugly out there, a little oversold quickly. So let's just see what happens here on the bounce. If we bounce and keep on bouncing, obviously that'd be a great thing. But if we have an anemic bounce and roll back over, that would not be good. So we'll probably put on more shorts unless we see some improvement fairly soon. Everybody have a fantastic night. If you have any questions, you got a routine. Thank you so much.